What would you do if I told you that you have $1 million to invest in Dubai? Would you blindly go in and invest in a project which is giving you minimal returns and someone who's just a few minutes away from you is making more than 20%, which realistically should have been you? Or first, see this video and know what are the most important factors for you to invest. The whole idea of investing in real estate is to match your investment with a goal you have in mind. And most of the time, what investors do is the complete opposite. So to make sure that doesn't happen to you, in this video, I have segregated every Dubai area to match your goal based on the current market. I'll tell you exactly what you need to know before you even put down a deposit. Before I dive in, let's talk about the danger zone. Because if you mess this up, nothing else in this video even matters. A lot of people get this one thing wrong. They hear that an area is popular and think it must be a good investment, or they see a decent rental yield today and assume that it will stay like that forever. And that's not how it works. Some areas, even in Dubai, are saturated. That means thousands of nearly identical units are coming out at the same time. Mostly studios, mostly standard one beds, nothing really special in areas like JVC or some parts of Business Bay. And to be honest, these are not places that are considered bad to live in. The main issue comes down to the supply of units. When you consider investing in areas like JVC or Business Bay, let's say you have a standard one bed. You're not just competing with tens, but more than hundreds of units which are nearly identical. Let's see the situations you will arrive in if you are one of the investors in these communities. If your goal was to rent, tenant will have majority of the power. You don't decrease your rent, they will move in the building right next to yours. If your goal was to exit, then usually when the market slows down, generic units in areas with high supply are discounted and sell last. The rental yields are still fine on paper, like 6 to 7%, but capital growth is basically flat once supply is at a high. But again, I'm not saying that areas like Business Bay or JVC are bad. They're really good areas to live in, but hard to get the most out of your investment. One rule over here: never buy average in a high density area, especially when you can't explain why the tenant will not choose 10 other units over yours. It's not like there is a best area in Dubai, it's just what goal you have in mind. There are three major categories that one should think. Do you want to generate ROI? Or do you want capital growth? Or do you want to preserve your wealth, whether it's long term or short term? Let's speak on each of these. The first one being ROI. If you want a property that generates good ROI, go for areas that tick boxes for potential tenants. Usually the boxes are connectivity, lifestyle comfort, noise levels, amenities of a building. To name a few areas, one is going to be Al Furjan, which sits right over here. There is going to be Discovery Gardens, which is right next door as well. You also have DSO, which is right over here. Entry prices are usually lower, rental demand is practical and steady. People rent here because it's affordable and functional, not because it's glamorous. And considering in the future, Al Furjan will still see growth with nearby neighbor, which is going to be Wasselgate, and also another community, which is going to be Motor City, which is right over here. If you're buying for rental income, think from a tenant's perspective as well. But at the same time, think about the service charges, the kind of people living within the community, and the vacancy risk. Because when you keep in mind these factors, you can predict what your cash flow will look like. Secondly, capital appreciation. If your goal is to grow your capital and not income, then this is your category. Wherever there is new infrastructure coming up, investments by the Dubai government, like the Al Maktoum International Airport, which is right over here, or mega projects that are going to be hotspots for tourists like the Creek Tower, or areas where the supply and infrastructure are matching the timeline it's delivered. Think of areas such as Dubai South. Think of areas such as Dubai Creek Harbour, which is right over here. Now you have another area which is waterfront and also comparatively has lesser price, Port Rashid or Maritime City. Dubai South benefits from Al Maktoum International Airport, as I said. Creek Harbour has 3 metro stations coming up, the huge Dubai Square Mall and commercial demand, and also major road infrastructure. Port Rashid and Maritime City will benefit on their price ranges being comparatively lesser to other waterfront properties. and potentially a metro station coming there as well. For reference, Port Rashid and Maritime City are right over here. By investing in these growth areas, you'll have to be okay with the noise, the construction and the waiting period, and always verify if the infrastructure is verified and funded. And finally, wealth preservation. The final category comes in for those investors who want to protect their capital in the long term, because the particular community is already established with prices well settled. Think of areas that are always in demand and scarce. Think of areas like downtown Dubai, which is right over here. You have the Palm Jumeirah, which is right over here, and Dubai Hills Estate. These are areas which will get quality tenants and buyers all the time and behave like prime districts in global cities. Only trade-off you're going to do is lower rental yield, steady but not crazy capital growth, and service charges being comparatively higher. But if your goal is stability, liquidity, and long-term demand, this is where you go. Even if you understand the framework, that's different when compared to actually investing the $1 million you have. That is when you have to understand the different factors when you invest, like timeline of investments, funds, risk and reward, supply versus demand, and especially having a goal but hitting it right, and many more factors as well, for which I am just one call away. Which brings us to the end of this video. If you like this video and want to see more of it, subscribe to Property Zone Real Estate's YouTube channel. This has been Dhruv Vindrani, and to get in touch with us, check the description below or comment down. One of us will get in touch with you.